Welcome traders, my name is Adam Harris, Chief Market Analyst. It is Sunday the 21st of January and I'm recording this for Monday, the week commencing Monday the 22nd of January. So we're, without freaking anyone else out, we are already heading towards February, so not that far away. So first of all, what I want to do here is talk about what's going on in the economic calendar this coming week. Really, I do think it's worthwhile paying attention to the Bank of Japan's monetary policy, actually, which I've headed up over here, which I didn't box out, but that looks, I would pay attention to that. And then really, I think the rest of the stuff is going to be focused on Thursday, which will be the refinancing rate, the monetary policy statement coming out of the EU, as well as unemployment claims out of the US, possibly an ECB press conference. To me, this is really the most interesting stuff this week. The rest of the stuff, unless it's a surprise, it'll just add the usual volatility. And really, most of the stuff is going to be non-US based stuff for now. Really, it's non-US countries, the remainder of the G8, to see how they're performing, because the US is doing just fine. So actually, for the last year or two, I just feel like all I ever do is talk about the US. Nothing to worry about there, nothing to see there for now. There isn't anything. So it's just looking at what's going on in the EU, what's happening in the UK, and how are they potentially performing and looking at. So anyway, that being said, let's move to the charts. Starting off with the volatility index, still near the lows, minimal volatility. Everything here looks good. And so looking here at the dollar index, one of the things I was looking for the last week was either a bullish breakout candle or a bearish breakout candle. We got the bullish breakout. In fact, it gapped really nice and aggressive there. So there we go. That is, generally speaking, we still have lower highs here. So from a weekly perspective, we're still potential for that downtrend, and we are sitting at a weekly resistance level. So we'll have to see how that goes. But I would say, again, looking at this, we're at the bottom of a range. We look bullish. I think the momentum leans towards the upside. But also, I just want to take note, that is kind of what you do when there's a consolidation period and there isn't really much for you to do. You just wait for that breakout to give you a clue as to kind of where it was going. And that was the one we got. Okay, so very happy with that. Let's have a look at euro dollar. So euro dollar, again, this one is within a downtrend on the daily, but still an uptrend on the weekly, and it could still find support. So again, we're not out of the woods yet. This happens. You get times when the monthly, the weekly, and the daily are all going in the same direction, and then you get periods when they're out of sync. And we're in one of those phases now where we've got the weekly essentially having to decide what it's doing. And while it's doing that, the daily has gone from an uptrend to a downtrend, or a downtrend to an uptrend. It's changing trend, and we need to see. So this area of 1.08 for me is really going to be a key area to test for support. One of the first clues of that, and I can mark this in, it's one of the most beautiful things we can do here, is going to be to put in just a bit of a dash trend line in around about this area, which looks as though it's going to break through that. So it's going to shift that momentum a little bit more to the upside. Okay, fine. If that's going to be the case, if we really don't want to do it there, we can do it there. But that's generally that downward bearish momentum. I would say that there's a fair case, even though we are on a downtrend on that daily, that we might see it actually start to react. So the easiest way to kind of get an answer to that is to watch the weekly candle on euro dollar weekly. If we break the low, it's a continuation down. If we break the high, we're changing that trend. It's become a swing low on the weekly, which means that even though we necessarily haven't broken this high, potentially there's enough of a shift in momentum to know where it's going to go. Sterling has gone into this range. We're still stuck within the range. We're still pushing to the upside. And so despite the fact that we had a really bullish dollar initially, we've actually still got cable pushing to the upside. So it's still holding. Again, so euro and GBP hinting at a weaker US dollar, but the dollar index hinting at a stronger dollar. So we've got that disconnect. That's not a bad thing. I said this last week. I don't want to repeat myself too much, but there we go. So we've got Aussie dollar, US dollar here as well, testing a level of support. I think that is a worthwhile level to identify. Let's go with that, and to see if it can bounce up from here. So in this particular case, that weekly is starting to look less strong or less certain of itself. So if I just go in here and just kind of put this in, this would appear to be a weekly level of support and resistance. That would be the one. And I'm just, I'll leave that there for now. So, and you can see that rejection over here. In fact, this is all wrong. This needs to be a level over here. Let's mark this in and just go and mark that. That's your level. So there we go. All right. So that's the level we want to watch. It's battling with that. We'll have to see how it goes. So Aussie dollar doing its own thing there. Kiwi dollar doing a similar thing to Aussie dollar. So basically Aussie dollar and Kiwi dollar doing their own thing over there. So just mark that level to see how that goes and keep an eye on that. We might still find support this week, and we get a weaker US dollar, could push it back. So it just looks to me, summing up so far, with these majors. Euro looks good, cable looks good, Aussie and Kiwi are less certain of it. Let's have a look at dollar yen. So dollar yen a little bit overextended on the daily, showing some exhaustion in here. From a monthly perspective, I think this is worthwhile. We actually had these drawn in a while ago, looking for this to be a good turning point. I would say that qualifies as a quality turn in that particular case. We've had a move down and move up. That's a solid rejection of the lows, hinting in this case, hinting in that dollar yen is likely to continue to the upside. That is a very, very strong move over 2 months to push it to the upside, December and January. And actually that means that aside from any kind of pullback here, there could be some potential for this to move up to these highs. But this 150 level is going to come under attack again, and we'll have to see. And often, as I said before, and now I am repeating myself, that dollar yen often tends to move in sync with the US dollar. So that would be interesting. If this year or this quarter, we start to get dollar yen or the yen pairs moving to the upside, but the dollar heading lower, that's very unusual. I can't recall when that last happened. but it's definitely something to keep an eye on. Dollar Swissy also having that rejection. So here we go. We've got dollar yen showing dollar strength, dollar Swissy showing dollar strength, but euro dollar showing euro strength, and cable showing cable strength. Very interesting. This is unusual, guys. I don't think I've recorded stuff like this in a while. So anyway, dollar CAD. Okay, dollar CAD also attempting to push back up but getting knocked down. Overall, though, I would say that this downtrend is under attack. The real question this week is, do we continue down from here, or do we break above these highs? So that is something that I want to keep an eye on. Is actually, I'm just going to mark the highs and the lows and then see what happens here. So, based off what we see, look, and again, dollar CAD's been doing its own thing. It's actually been strengthening quite a bit. I think that there's more of a likelihood that this is going to continue to the upside. Okay, let's have a look at gold. Gold continues, had a bit of a move this week, managed to recover for most of that. If you look on the weekly, you can see some strong clues here. Those pushing back to really turn that momentum around, however, and there's a downtrend on the daily. You really want to be watching, particularly watching this level here, which is 2058. So 2058, which is the high of this one. I'm going to stick in that a little bit there, plug it over there, and that is going to be the level that you want to watch. Because if we break above that, we're likely to take another run at that resistance band, that sort of that danger zone area, which is just trying to get through to that 2,100 level. So there's definite pressure to the upside and worthwhile watching, but it's going to have some increased volatility. Silver as well, not really showing much of that. Actually, silver looking way more bearish at this time, testing the lows, series of lower highs, and the MACD below zero. It's way more bearish than bullish. You can see it's almost dipping below zero on the week, which means it's to go down. So there's definitely selling pressure on silver. The question is that pressure also there in gold? Natural gas tried to bounce back up, but it just keeps getting knocked lower and lower and lower. So there we go. Look at the monthly wick over there. I include natural gas under energy. So when I'm in this section now, we're looking at natural gas, light crude, and West Texas crude. We're not looking at Brent because they're so highly correlated. Honestly, whatever the analysis is for light crude and West Texas, it's going to be the same for those two. And if it deviates, I'll obviously include that. I'm not trying to be indifferent to it. Okay, so have a look here. Look at crude, this one as well, crude light. Just look at that sideways motion. Not a lot happening there. We look at it from a monthly perspective. This is significant. Should we get a bullish candle over here, we could see a turnaround happening. So that's what I would do. And in fact, in a way, this is forming a series of high lows into a flat level. This is forming, I'm going to mark it with an arrow to see if it ultimately becomes something. Get up to here, and we've got a bit of a flat level breakout. Let's call it there. So that's what we've got. Little bit of a potential for a breakout to the upside. Let's have a look and see if that's going to happen over any time soon. Okay, so that was crude light is a similar thing. You can see I'm going to mark it here as well. So we've also got this, and I want to do this one over here so you can see that level. Just going to bring it off so I can select it a little bit easier and see if we get a bit of a break through that level as well. Both the same for those levels, and keep an eye on that. All right, let's move into the global indices. Very, very nice. And actually this, believe it or not, is signal. So why is this a buy signal on its own? It's got a beautiful double bottom here, really nice, those little tweezer impact there. It's got a bullish engulfing candle and it's broken to the upside. And this was also, believe it or not, a bull flag. So we've had a really nice strong move. We're going to test this resistance level, but based off what I see here in isolation, so if you just ignore what you see there, this is a bullish signal. It's likely to continue to the upside in isolation. Yes, when you pull back, you can see that there's a bit of a level of resistance. So I'm going to mark it, but I'm kind of leaning the way if it's going to get through it. This week is going to be the key thing for that. Isolation is a very, very bullish signal. And if you think about it, if you're trying to, in a way, it doesn't really matter what's happened in the past. I mean, this is a crazy approach to take, but as I've been trading for longer and longer, I start to have more and more faith in what stuff is happening as it's unfolding, rather than and weighing up how much the previous history is relevant this time. Sometimes the previous history is relevant because that level, you know, it's a significant level and you can see how price is reacting to it. So with gold, it's a great example of that. But then also there's certain things it does that deviates from that. Suddenly it looks more bullish than it should in a breakthrough. So you have to weigh up when it's behaving in line with what your expectations are and when it's behaving outside of that. And this is incredibly bullish. It hinted at a continuation. So that's what I want to see happen this week. The S&P looking particularly good. We had a really nice retracement on the weekly and a beautiful continuation bar. And there's a breakout there. And higher lows, this looks really good. So for day traders, they'll be looking for the smallest. And swing traders will also be looking for that. Okay. Looks good so far. NASDAQ. NASDAQ had the sweetest pullback. That was a standalone buy signal. Very nice. Inside bullish candle, just about, and a nice continuation. So the three that we've looked at so far, their weeklies basically look like they're just about to take off, which means I've been talking about how we needed a correction. It appears, based off the limited information that I have here, combined with experience, this looks as though the weekly is getting ready to do the next leg up, which means that if that's the case, we're going to see this head up towards 19,000. Could that be the case? That's a bit crazy. Should we mark it? Could that be the case? Should we just mark 19,000 like this and just see what happens? I'd be amazed, but certainly 18,000. So we're going to have to see how that goes, but they look bullish. The Russell is at the top of its range. Remember, and this I said a while back, so if you didn't see this, when we break out of the Russell, I expect that to be a confirmation the markets are bullish. Because when you get the ones that have been lagging for a while finally start to break out of their ranges and start doing stuff, that's a really good sign. In fact, one of the biggest clues that we were in a bull market, one of the biggest, believe it or not, was the Nikkei. Consolidating in this area, going back to March 21, and broke out April 23 last year. And so it was a lagging index and it took off and it's already had a pullback and it's taken off again. And like, so in other words, if one of the is suddenly just super bullish, you're in a bull market. It doesn't really matter what anything else is doing. Okay. It's just also for those of you who are new to this, it's better for you to have started to get involved in learning how to read the markets when it's been a bit unsure of itself, because when the market's really bullish and it's really easy, that's actually what messes people up, because they could go 10 years of a bull market, never really making money, hit the next bear market and they lose everything because they've never encountered a bear market before. They've heard of it, they've seen it in the past, but they've never lived through it. True stuff. So if you have been getting involved in trading in the last 2 years, you might not appreciate it, but you've been learning during a period where it's been incredibly tough, and therefore if it starts getting easy, the first thing at least you've learned is that it can be tough, and it gets relatively easier. It makes you more cautious. 2000. Once it breaks out of this, there would be another confirmation, another move. It should do that soon. The FTSE itself is still within the range. I expect that to continue to break out. And let's see if any of the news from this week makes a difference. The DAX having a little bit of a pullback here. This is a mini pullback over here. This is a setup. For me, I really like this. If you break the high this weekly, it's a continuation to the upside. Very much like that. A little bit of a bull flag there. It looks beautiful. I think, you know, in hindsight, this was a sweet setup. Look, this one here, right off the 50-period moving average, off a support resistance level, beautiful little bullish candle. If it was possible, that would have been the perfect entry. Entry above the high, stop loss below the low, targeting probably something stupid. 5 to 1, 5R, 6R, 7R, ridiculous on the daily. And for traders, that's not for investors, that's for traders. Looking really good. And so there's a reason why it's good to do hindsight stuff. For people who are like, well, what's the point? And obviously hindsight is, there's no benefit to it. Actually, it is. Every time you identify a setup that happened, it's the same as backtesting. So identifying a setup in hindsight is backtesting. And what is backtesting? Backtesting, meaning you're training your brain to identify a setup that you missed so that the next time it happened, you've learned from that and your brain doesn't miss it again. Not just because it's in the financial markets. Anything in life, if you review stuff, you can go, oh, I missed that. And next time you don't miss it. So it builds up your confidence, builds up your recognition skills. It also confirms for you that there are opportunities that happen. They happen in the markets and we miss them. Anyway, no, I didn't get it, I missed it, but I'm looking at that. And that's what I do. So I'll do it in front of you guys, but also I'll do it in private. I'll be like, oop, this week, how many obvious that I missed out, or maybe not obvious that I missed out. It's a good habit to go through. It improves your abilities. This is in a downtrend, for example. Okay, so that's a bit of a weekly retracement, and there's definitely some level of resistance there, the ASX, but it is trying to break out, and I would acknowledge, to be fair, that it hasn't quite escaped this level yet, but I'd be looking for that. So if we get a bullish week this week, looking good. The frustrating thing that when you get a bullish week, you really get a bullish week. Like you're waiting for it to pull back, and then you're waiting for it to give you a clue that it's turning around, and then it goes. You don't get it. Nikkei, we've spoken about already. Let's move on to these. Look at this Apple. Beautiful, beautiful, beautiful. Look at the bullish engulfing bar off a level of support. That's a double bottom. So from that, beautiful. That was a really nice bounce. This is looking good. My expectation for now is Apple's going to continue up. And there's a double bottom here. There we go. That's a double bottom. Happy with that. Apple's doing fine. Amazon also looks good. That's a continuation bar. Looks really nice. Love it. These ones, most of these I just have stock in already. So it doesn't really, I might trade them, might not. This is a little bit of a level here. So we've got a high here and another sort of a bearish divergence. It's probably, and it's pulled back immediately, done a bullish engulfing bar and bullish inside bar. Looks fine. And there was a nice little bullish inside bar as well. Lots of little clues. Looks fine. There's bearish divergence here. But what that might just do is result in a bit of a consolidation before it carries on. So I'm okay with that. Let's look at ARK. ARK is battling to get out, but this should produce, look at that. Really nice little setup over there. And that should produce a bullish candle. So we're looking for a bullish candle this week to take us to the up. That's what we're looking for, right? Cool. ASML, fine, solid. That's where it is now, but that's fine. It's on its way. Bullish, bullish, bullish. Glencore. Okay, look at that. Okay, so Glencore's in a range. Again, in this particular case, let's say I held Glencore. I think I do have Glencore on one of the accounts. I wouldn't get out of it until it broke out of this range because it could turn around. You could have this tank and then it recovers. So I keep an eye on that, but that is notably, acceptably a gap down. Looks a bit, doesn't look great. Tesco just keeps going. It needs a little bit of a correction here. There's some, but tiny little bit of some form of resistance over here, but it should be able to carry on doing that stuff. Okay, Amex. That's a buy. Looks good. Broken through. It's coming up to all-time highs. Yes, it is, but that would be a trend continuation. If you saw that in isolation, that's a bit of a no-brainer. We'll see. We'll see, but that looks good. It's right off the top of these highs as well. Boom. Okay, so there we go. Amex. Berkshire Hathaway looks good. That's a bit of a continuation. Why did I mark this? Was it in a range? Yeah, it's fine. That can go now. Looks good. Coca-Cola, bumpy. It's battling. Coca-Cola battles a little bit here and there. It looks okay though. I think it should continue this week. I think. In the past, I've been like, yeah, this looks good, and then have a bit of a correction. That has happened. So I'm like, this week I expect it to continue, and then it has a correction, and then the next week it continues. So yeah, we can have that happen. My point is that overall there are no signs of inherent weakness that I see in the markets. So I marked this one as well. BP, I was looking to see that if crude oil went up, I wanted to see if it was in this area and go up, and it hasn't. So it's not looking good. At all, doesn't look bullish. Still can't get past that danger zone. I think we can extend that comfortably, and we're gonna have to see what happens here. Here it's really about what it can produce in this area. Exxon should be mostly the same. There we go. It's at the bottom of the range. So there we go, and starting to dip through that range. So this I want to leave. I want to see what happens with it. I'm going to bring this down right down to those lows to see if it continues to go outside that. So again, I use boxes and trend lines and stuff to really frame price action. Because what you're doing, all those tools are for you, for each of us individually, to organize the data in a way that it gives us confirmation or information that we can then use. It's not necessarily how somebody else does it. Yes, you might draw your horizontal level the exact same place as most of the other traders, but then that's not a problem. There's nothing wrong with it. But you really are, your goal is to draw a line so that you go, okay, well, if price breaks past this point, then it's not, then it's definitely, I've given it every opportunity to find support, every opportunity, and it's gone through. So for example, here, if I line it up at that low, and then next week it breaks below that, then it's out the range. I've given it every opportunity to stay within the range. It hasn't done it. So you'll often see me adjust the lines and do it and put something somewhere there, because if it crosses over it, then it's not, I didn't misjudge it. It has definitely, there's no doubt it's moved across that point. So Exxon and BP not looking super strong. General Motors, strong level of resistance here, but it's set up a buy signal, meaning it's set up, not a buy signal, a bullish signal. It's above the 50-period moving average. It's testing the 50-period moving average for support. It could potentially take another run. So I'm gonna mark this over here with a signal, and I'm just gonna kind of, let's see what happens, because it's gotta get past that level, and we'll see what happens this coming week. JP Morgan Chase, same thing, looks good. They look fine. Could we have a down week this week and then it carries on up? We could, but again, the price action looks pretty happy. Okay, Adidas. Battling with this level here. I think I said this one wasn't looking as strong, and it still looks weak. I think it's going to come back down to test this level. It's right on that 50 period. It could turn around here, but it's just not looking, something about the angle. This was really nice and bullish. So the angle at which price moves, if it's going sideways, it's got no momentum. If it's going very steeply up, it's very bullish, like almost bubble-like behavior, bullish momentum. If it's going down at a very steep angle, it's usually fear-driven, panic. Okay, so the degree, the angle of degree is very important. When you look at this, the angle is nice and strong and healthy, and then it loses it. So in other words, you've got an angle that goes roughly like this, and then the angle changes, and now the angle looks sort of more like this. I'm just drawing it through the middle of the candles. So it's losing that momentum. Okay, so it doesn't look so good there. I'll leave that just like that for now. Mets is fine. Mets is solid, man. Wow. Morgan Stanley. It's just got to get through this level of resistance. I know it gapped down a bit. I could see there's, from this side to this side, I'll just mark that. Should still be able to get through that. We're just going to have to see how that goes. We'll see if it can recover. Otherwise, it'll have to come back down to this level, find support, and bounce back up. NVIDIA, on fire. That was really good. These were solid buy signals. And again, that was actually in real time. So that one was in hindsight, but that one was in real time. All right, because remember, what we're doing here, ladies and gentlemen, is we're building up a case to take a trade. I know that a lot of fundamental analysts, they don't believe technical analysis works. But it isn't because it doesn't work. It's because their brain can't understand how the information they get this way is converted into the same information, because it's the same information. It's two sides of the same coin. But fundamental analysts don't understand that. They're like, no, this is a why. If I read why Apple does this or why Tesla does this, I get a rational explanation. The problem is these days there's so much propaganda out there that when you hear stuff from the CEO or this or that, it's not necessarily true. It could be just a newspaper thing they've released or a publicist has done it. It's not always that. There's a lot of information out there, and so you can get a lot of misinformation. Whereas the technicals, you can't really hide that. But it's the same information, because all of this stuff goes through into physical orders that clients are placing. And if people love something, you can see it in the stock price, because you can see it responding to that. You can go and find out why they love it by reading the publicity stuff or the public stuff, the media stuff. But that just gives you an explanation as to why. But this tells you what. So there's what versus why. Anyway. So I want to try to find a way to explain to people who prefer fundamental analysis, who don't think technical analysis works because they don't get it, to explain to them in a way that they understand. They go, oh, okay, I see it now, I see it now. I just need a way to be able to do that. Netflix is battling with this level, but it looks fine. You can just see it battling here, battling, but it's fine. It's not as weak so far at this time. Beautiful. Bullish engulfing candle, taking off. PayPal, welcome to the party, man. Welcome to the party, man. Okay, let's see. Spotify, looks good. Nice pullback, looks fine. Nothing wrong there. Spider, looks okay. It's still in this range, but that's a double bottom. I spoke to you guys about this, a double bottom. You go back. It should, double bottom should break out. That should be able to get up to 120. I'll mark this area. It should be able to get up to 120. Double bottoms can be very, I like double bottoms, I cannot lie. But yeah, it should be able to break out. FedEx, battling in this area, but it's ping-ponging around. We just have to leave that be. Should be able to recover. Whatever happened here, it doesn't really matter to me. I don't know what it was, but it should be able to recover. Tesla. Okay, let's talk about Tesla. I want to talk about Tesla and Walt Disney here, because Walt Disney might have set up a buy signal. And you guys get exclusive preview to this before I post about it anywhere else. So let's talk about Tesla. Okay. Just technically, right? We don't have to go into the media, don't have to go into anything on it. I did an article a very detailed article on Tesla for investing.com. So if you search Adam Harris, investing.com, Tesla, you should get the article, Google it, you should be able to see it. Here's the thing though, we've broken through this downward sloping trend line. That in itself is just a small clue. It's not conclusive. It's like, okay, we've broken through that downward trend line. We're testing the support level. This is really the next level you want to watch. Okay, so you want to watch the surf, because imagine now that whoever's watching this, you're a Tesla bull or a Tesla bear. Okay, so if you're a Tesla bear and you're convinced it's going to sink, that's really the level you kind of want to pay attention to, because it's in a channel anyway. You could argue that this is a channel and therefore it's a bull channel, it's a buy channel. If we break out through that, that's going to be a buy signal. We are still in that channel, so it doesn't matter whether you're a bull or a bear on Tesla, it is still within that channel, and therefore it's inconclusive. It becomes more likely if we break below the channel to the downside and we break support levels. So that means if you start to reach areas like 180, the thing is that once it starts to drop below a certain point, people get out. So then in other words, buyers are replaced by sellers, and sellers get in because they want to, they want to sell, they want to short it. And so it starts to pick up weight, it starts to head lower, it starts to drop faster. And it's really that 180 level where you would, and certainly down by these lows, where you would see it start to accelerate, meaning you'd see a significant drop, probably it would drip, 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 and then a significant drop because of that. People would panic, get out, and then other people will come in. We aren't there yet. We aren't at that. These are the levels you want to watch, that 194, the 180, and then these lows. These three lows are probably, believe it or not, to sound dramatic, are the most significant levels in Tesla's life right now. Like if you break through those, you gain a little bit more momentum to the downside. If you break through that, you gain even more bears and buyers step out. And then once you break through that, then the weightings will shift significantly. The media will be more negative. You know, Elon will be ousted as CEO, and then the Tesla bulls going, no, that's impossible. Tesla's worth nothing without him. The Tesla bears think that the only thing that will save Tesla is getting rid of Elon. They know the stock price will take a hit, but people love the product. They just don't like the guy. So it's kind of like stuff like that. So it's all out there. Point is, if for the Tesla bulls, if we come up here and we break above this high, the opposite will happen. People who were thinking of getting out will stay in. Maybe they'll add to their positions. Other buyers people who are nervous will stop buying, and so on and so forth. And so this area is going to be effectively one of those. That's why you need to pay attention to what's happening now. But right now, it's skirting also the negative sentiment on the MACD, meaning it's definitely, if this was a tug of war, the bears are winning. They're pulling over the line right now, but the game isn't over yet. Okay, that's done. Tesla done. Let's move on. Vanguard. Vanguard looks good. I have to go back. One last thing. Sorry. Other tech stocks are taken off. Everybody else is doing fine. Why is Tesla tanking? If it's such a great company and visionary and so amazing, why is it stumbling now? It should have been leading the bull market. It should have been doing well when everyone else is doing badly. Now it's doing badly when everyone else is doing well. It's just like this stuff. And also, there's rumors, and it's a rumor the books are cooked, like Enron level cooked. Like can't even imagine what that means, but Enron level cooked. So like, I don't know. It's a rumor and therefore it's discounted. I only care about the price. I only care about the price. I'm just saying, if these things happen, there's like two sides to the whole thing. Walt Disney, let's go to this. Let's talk about this. Walt Disney could be providing a possible, maybe possible buy signal. In isolation, if you knew nothing else, this is a turnaround. You've got bullish divergence, you've got a break and a double bottom. So there's your first test, pulls back, produces a double bottom, bullish candle there. This, in isolation, if I was looking at euro, dollar, sterling, gold, that's a buy signal. That's a bit of a weak buy signal. That's a very bullish follow through. Excuse me. So, in isolation, could Disney be doing it? It's a little bit above that 50-period moving average on the weekly. This could turn out and again, this is a maybe. Other stuff I'm a little bit more confident about. We're very, very far from the highs. This could turn out to be the next kind of the last time we see this low for a while. We will see. And again, I'm saying this, take it with a massive bucket of salt. I just want to comment on that because we've just gone bullish here. We've got a lot of bullish price action here. This could turn out to be the bottom of Disney, and it could work its way up to here. And a hypothetical would be that if I got in and my entry was, excuse me, come on, man. Oh, come on. You are killing me here. That if my entry was above the high, stop loss here or there, that could turn out to be what they call like a 10 bagger or 20 bagger. Your reward to risk ratio back up to all the highs would be ridiculous. But again, in a situation like that, I would put a small percentage on it. And again, I'm not your financial advisor. Regulation wouldn't even allow me to do that. I wouldn't do it. I just want to talk about things here that I like and see. I'll make, this is not financial advice. You've got to get that from someone else. But it's a nice idea. It's just something to think about, especially if you're a technical analysis fan. Okay, bonds looking fine. Remember, they're trying to turn around. They're battling a little bit over here, but they're having their first weekly retracement. So they could turn. So here, I would again be looking for a bit of a bullish candle to happen here at some point soon if it's going to do that. EURUSD, I marked that one, but again, I want to see if it's going to be the case. That's not it. So let's get rid of that. Will we get it, or will it just come back down again? It's actually, now you can see it's within that range. Doesn't look the same anymore. But let's see if we get a bit of a bullish candle here. Let's see. Okay, there we go. And let's look at cryptos. So Bitcoin is coming back down to test this level. That's good. That's a nice, decent retracement. Let's see if we can take off from here. If that's the case, that's a solid rejection. Usually, if we had a rejection like this here and a fail breakout, I'd actually expect a deeper pullback. I'd expect a pullback down to here. So let's see if that happens. A retracement back down towards 37,000 at the shallowest, and further down towards 31,000. Let's see if that happens. But it has at least done this retracement, which means from here it can go. It can go up now. It doesn't have to come back anymore. That's the kind of, I was looking for correction here to take a breather. Instead, what it did was it went up a little bit further and then it had a breather. So we'll see if that's going to be the case. So I'm not as concerned about it at this time. Ethereum still seems to be doing okay, coming down to these levels. Basically, they're potentially waiting now. Maybe they're coming back in sync with the other stuff. This one again here is forming a little bit of that. Let's see if we start to break through that possible level of support. They're all doing the same thing. Cardano, bit of a double bottom there. That could be very interesting. That might be it. That might be the thing that turns around. So I would then mark it like this. Just do that. Once you start to breach to that, it's likely to turn around. We've got Binance. That looks good. See, Binance is starting to push off. It's within a range though. So let's mark the range, because when it's in that range and then it can't get out the range, at least we understand why it can't. Okay, let's see. Got to get through that. Cool, but looks good. Binance taken off on its own. So lots of things to keep an eye on. For the most part, ladies and gentlemen, there should be some safer, decent opportunities this week. Couple there to pay attention to if you are invested in them emotionally, not money-wise. Remember, again, I'm not giving you financial advice. I identify my technical analysis, I make my case to you, and then you make a decision based on that. And that's it. I want to wish you a fantastic week, and I look forward to seeing you next weekend, and it's good to be back. Thank you.